Welcome back to Gold Rush Reporter, your go-to channel for everything silver. If you're stacking or just keeping an eye on the markets, you're in the right place. Today, we're diving into something huge, the silver move that could shake the market like nothing we've seen in decades. Stick around because this isn't a small bump to $60. This is a potential explosion to $200, maybe even $500 per ounce. And yes, it's closer than you think. Forget relying on standard technical analysis like RSI or moving averages. If you do, you're going to miss the real move. Despite fundamentals screaming higher, silver has been kept down, choked by supply constraints and some mysterious mechanisms that the market rarely talks about. But that control is starting to fail. The system built to suppress silver is showing cracks, and the stage is being set for a historic breakout. Right now, the market is facing what I would call a perfect storm: falling supply, rising demand, and shaky financial markets. The stars are aligning, and once that happens, there's no turning back. Prices that once seemed impossible are suddenly within reach. You might be asking, why hasn't this happened sooner? Well, paper silver, phantom ounces, and market manipulation have kept the illusion alive. But those days are ending. Physical silver demand is surging. People are no longer just trading paper contracts. They want delivery. Institutions are getting caught off guard, and COMEX is starting to feel the strain. Inventories are dropping to levels not seen in decades, while industrial demand keeps climbing. Solar power alone is gobbling up millions of ounces annually, and electric vehicles plus AI infrastructure are creating unprecedented industrial demand. Supply cannot adjust fast enough. This isn't speculation. The silver market is fundamentally constrained. Around 75% of silver comes as a byproduct of mining other metals, meaning new primary silver production is extremely limited. Recycling isn't filling the gap either. By 2025, the silver deficit could reach up to 182 million ounces, the second highest in history. And when supply is this tight, even a small push from investors could send prices soaring. For those of you following along, this is the moment to start paying attention. Traditional indicators won't alert you to this move. You need to look at underlying momentum, spread relationships with gold, and physical demand. These signals are flashing, and when the breakout starts, it's going to be fast. The smart money is watching this very closely. Silver isn't just an investment, it's a lever, ready to magnify the next financial storm. If you've been waiting for confirmation, you might already be late. But understanding what's happening behind the scenes will give you an edge before the masses catch on. Stay tuned, because in the next part, we'll break down exactly why this mechanism has held silver down for so long, and what happens when it finally collapses. This is where things get really interesting, and you don't want to miss a word. All right, let's dig deeper. The reason silver has been restrained for so long isn't magic. It's manipulation. Plain and simple. Institutions have been selling phantom ounces of silver, contracts backed by nothing, flooding the market to keep prices low. On paper, it looks like supply is abundant. But in reality, physical silver is vanishing fast. COMEX inventories have plunged to levels not seen in decades, with only 28-32 million ounces available for immediate delivery. That's barely enough to cover a few months of industrial demand. Even though billions of ounces appear on paper through ETFs and other instruments, most of it is owned by holders who won't sell anytime soon. This creates a massive disconnect. Demand is surging, but prices remain muted because of empty promises and paper contracts. However, more investors and institutions are now insisting on physical delivery, and this is exactly why the illusion is starting to crumble. The suppressed pricing mechanism is losing its effectiveness, and the next major silver move could be unstoppable. Michael Oliver, a technical analyst few outside the inner circle follow, has been highlighting this for a while. He's not looking at RSI, moving averages, or typical support resistance lines. He's monitoring the silver to gold ratio and spread relationships that reveal the underlying momentum. Right now, the spread between silver and gold is flashing red, signaling that the cap on silver prices is about to break. In simple terms, when this ratio crosses a certain threshold, silver is likely to surge dramatically, just like it did in 2010, 2011, or 1979, 1980. Let's put that into perspective. In 2010, when the ratio triggered, silver jumped from $17 to almost $50 in 10 months. In 1980, a similar breakout caused silver to rise from $6 to more than $45 in less than a week. These aren't small moves, they're explosive. And they happen when physical supply meets rising demand at a critical tipping point. Now, you might ask, is this just theory? Or is there real industrial pressure too? It's real. More than 50% of silver demand today comes from industry. Solar panels, electric vehicles, high-efficiency electronics, and AI infrastructure. These sectors aren't waiting for the price to drop. They need silver now. The solar industry alone will consume between 280 320 million ounces in 2025, accounting for roughly 30% of global mine supply. EV production and AI systems are adding tens of millions more ounces annually. This demand is relentless, and supply simply can't keep up. Recycling isn't helping either. Despite high silver prices earlier this year, scrap recovery remains low because there's little incentive to collect old silver. So the supply gap continues to widen, and analysts predict the silver deficit could hit 145, 182 million ounces next year. That's massive, especially in a market this small. In short, we're at the point where fundamentals and industrial demand are no longer just nudging prices. They're about to push silver into uncharted territory. And when this happens, traditional technical analysis will be useless. The market's past manipulation, the phantom ounces and paper contracts will fail to contain silver. Here's where it starts to get intense. Silver's breakout isn't happening in isolation. It's deeply tied to other markets, especially gold and the broader stock indices. The key is understanding how silver interacts with gold via the silver to gold ratio. Right now, silver is around $47, gold near 3,770, putting the ratio at roughly 79.8. Historically, once this ratio reaches the 131.32% zone, silver has detonated relative to gold. We're hovering just below that threshold, which means the stage is set for a major move. Momentum plays a huge role here. It's not enough to watch daily charts. You need to see the underlying shifts in market behavior. The spread chart shows pressure building. Silver has been consolidating, moving from the 30s to 50s over recent months. That momentum is now preparing to tip the market into a ballistic phase. When it breaks, the price won't climb gradually. It will rocket, and latecomers will watch helplessly from the sidelines. COMEX's paper game is collapsing. The institutions controlling these phantom contracts can no longer suppress the market because physical silver demand is overwhelming the paper supply. Investors are demanding physical delivery, industrial demand is skyrocketing, and inventories are historically low. When the illusion fails, silver will react violently. This is not speculation. It's logistics meeting market reality. Consider this. 75% of the world's silver comes as a byproduct from mines producing copper, zinc, lead, or gold. You can't suddenly increase silver production overnight. The supply is inelastic. Current projections for 2025 estimate mine supply around 840 million ounces, barely changed from previous years. No new large-scale primary silver mines are expected until the 2030s. This structural limit, combined with surging demand, ensures that once silver breaks out, it will have almost no immediate relief valve. Demand is not just industrial, it's also structural and strategic. Solar panels, electric vehicles, high-efficiency electronics, and AI systems are all consuming silver at unprecedented rates. Solar alone will need up to 320 million ounces next year. EV production will triple by 2030, and AI infrastructure continues to grow, requiring silver for bus bars, switches, and contacts. This is physical demand that cannot be delayed. The supply gap is widening rapidly, predicted to reach the second largest deficit in history. Now, consider the broader financial system. Stock markets are precarious, debt levels are rising, geopolitical tensions persist, and fiat currencies are losing credibility. In past crises, silver has acted as a leveraged hedge during market collapses. The next downturn could trigger the long-suppressed price explosion we've been warning about. Unlike gold, silver is small enough to be moved dramatically by a relatively modest shift of investor capital. Investors must also understand the history of bubbles and breakouts. In 2008, silver dipped temporarily, then soared from $9 to nearly $50 in 2 years. In 1979, during the US financial crisis, it rocketed past $40 within months. The current setup is even more strained. Market manipulation is failing, physical supply is tight, and industrial demand is surging. We're entering the phase where everything aligns for a silver explosion. The technical signals, physical shortages, and industrial demand are all converging. The silver-to-gold ratio is on the verge of breaching a key threshold, around 1.32%. Once it crosses, we'll likely see silver detach from gold's shadow, initiating a parabolic rally. Historically, these breakouts happen fast, not slowly. When silver surged from $17 to $50 in 2010, or from $6 to over $45 in 1979, it didn't crawl upward. It detonated almost overnight, once structural constraints and momentum lined up. Physical demand is the linchpin. COMEX inventories are at historically low levels, 28 to 32 million ounces, barely enough to cover months of industrial use. And industrial consumption isn't static. It's accelerating due to solar energy, electric vehicles, high-efficiency electronics, and AI infrastructure. Solar panels alone will use up to 320 million ounces in 2025, and global EV production is expected to triple. AI and data centers need massive quantities of silver for critical components. Supply cannot adjust to match this pace. Unlike other commodities, silver production is mostly a byproduct of mining for other metals, so scaling up output quickly is impossible. The broader financial system is also precarious. Stock markets are volatile, fiat currencies are increasingly distrusted, and debt loads are high. Historically, silver has acted as a leveraged hedge during such crises. When investors flee equities, even a modest influx of capital into the silver market can trigger massive price swings. Unlike gold, silver's market size is small enough for these movements to be dramatic. Momentum and spreads matter more than daily charts. The real story isn't in the typical RSI or moving averages. It's in the underlying spreads between silver and gold and between silver and major indices like the S&P 500. These ratios are flashing critical signals, indicating that the long-suppressed silver market is poised for a breakout. Pay attention to these technical setups. Ignoring them risks missing the move entirely. The paper silver game is faltering. Institutions have been flooding the market with unbacked contracts to suppress prices. But physical demand is overwhelming the paper supply. Investors increasingly request delivery of physical silver, making it impossible for COMEX to maintain the illusion. When this mechanism fails, silver will react violently. This isn't theory. It's logistics and market mechanics in action. We are approaching a critical tipping point. Once spreads break, momentum will accelerate. Paper supply will fail to contain the market, and latecomers will have no chance but to watch as silver skyrockets. Industrial demand is non-negotiable. Solar, EVs, and AI systems need silver now, not later. Meanwhile, manipulative tactics that have held silver down for decades are collapsing. The market is about to experience a perfect storm: structural scarcity, industrial necessity, and investor migration toward tangible assets. Here's where it all comes together. The silver market is on the verge of a historic breakout. We've seen the supply constraints, the skyrocketing industrial demand, and the structural weaknesses in paper silver all align. The silver-to-gold ratio and other momentum indicators are flashing critical signals. When this setup triggers, silver isn't just going to move, it's going to surge, potentially to levels we haven't seen in decades. This isn't speculation. It's the result of predictable market mechanics meeting real-world shortages and insatiable industrial consumption. Investors and stackers need to understand that timing is everything. The parabolic move won't be gradual. Once spreads break and momentum accelerates, late entrants risk paying a heavy premium or missing the move entirely. Solar, electric vehicles, high-efficiency electronics, and AI infrastructure are demanding physical silver right now, and production can't keep up. Paper contracts won't save the manipulators anymore. Physical demand is the true driver. For those watching the markets, keep a close eye on the silver-to-gold ratio, COMEX inventory levels, and industrial consumption metrics. These are your early warning signals. Once thresholds are breached, momentum will take over, and the market will respond far faster than any technical analyst relying solely on RSI or moving averages could predict. This is a rare convergence of fundamentals, momentum, and scarcity that creates explosive opportunity. If you want to stay ahead, now is the time to act. Physical silver, particularly coins and bars with real delivery options, is where savvy stackers are positioning themselves. Diversifying into select silver miners can also amplify gains, but understanding the interplay between paper and physical markets is crucial. Knowledge of spreads, ratios, and momentum charts isn't just academic. It's actionable intelligence that can mean the difference between catching the wave or watching it pass. And that wraps up today's in-depth analysis on what could be the most dramatic silver move in half a century. If you found this breakdown valuable, make sure to subscribe to Gold Rush Reporter for weekly updates, real-time alerts, and exclusive insights into the silver market. Hit the notification bell so you don't miss any critical developments. Engage with the community by leaving comments and sharing your thoughts. We'll discuss strategies, answer questions, and provide deeper dives into supply, demand, and momentum. Stay vigilant, stay informed, and most importantly, stay stacked. The silver surge is coming, and the early birds who understand the mechanics will reap the rewards. Thanks for watching Gold Rush Reporter, your trusted source for honest expert silver analysis. See you in the next report.